Right. Let's talk more about the market setup this morning with Rebecca Patterson. Joins us here at Post 9. Of course, it's great to have you, Rebecca. Welcome.
Thank you.
The desk notes today are pretty constructive, although one of them, I think it's RBC, looks at earnings revisions, S&P X top 10, and there is where you're starting to see a little bit of a stumble, right, to our points about economic pressure.
Yeah, I mean, we do have a tale of two economies. The tech sector, broadly defined, is driving buybacks with financials, but it's mainly driving the buybacks. We're on track for $1 trillion potentially of buybacks this year, which would be a new record. That's a major support. Again, a lot of that free cash flow driving it is tech. Tech obviously also driving the CapEx story that's supporting the economy and getting us this growth. But to your point, the earnings revisions that don't look so pretty for everything else, you see the same thing with the economic data. So on the surface, everything is fine. Under the surface, it's not as strong. It's very narrow, and it's just not as strong.
So the Fed's path to cutting makes sense.
I mean, I think taking an insurance cut, similar to what Greenspan did in 1995-96, exactly. I think that does make sense. But you have to remember, I mean, equities are at all-time highs or near all-time highs. If you look at the Fed's financial conditions index, it's near all-time easy levels outside of the COVID response. Investment-grade credit spreads near all-time tights. So it's hard to argue that interest rates are hugely restrictive right now, given those conditions. Banks are lending. It's not preventing economic activity or hurting markets.
But as we showed with that chart, market's really convinced there's going to be more cuts coming this year and next year, and more than the Fed. And Carl's right. The market tends to overestimate how much the Fed cuts, and also you can see it's also overestimated how much it tightens as well.
Yeah.
But why do you think the market is gunning for cuts like this?
I mean, I think if we get a change, well, we will get a change. When we get a change in Fed leadership next May, depending on who that person is and depending on the makeup of the Fed overall and the voters, that could certainly open the door to more aggressive easing, even if inflation remains above target. So that could be one part of the answer to the question. Or it could be that people are looking for the labor market to soften more, which could help bring down wage and inflation pressures, which would allow the Fed to ease.
Do you think that's going to happen?
I'm still a little skeptical on the degree of cuts priced in. I do think we'll get more cuts, but 6, I believe, by the end of next year seems pretty aggressive.
What's your view on the labor market right now? We were just having a conversation, obviously, about college graduates' inability to potentially find work, what the impact may or may not really be right now of AI on that.
Yeah. I mean, I think when you look in the payroll data, and I did, so far the AI directly related cuts are fairly small. The federal government cuts are really what's been driving job losses so far this year. But as we go into next year and companies are trying to keep a tight lid on budgets, they're spending money to invest in AI, and they need to find offsets to keep costs under control. It could be indirectly tied to AI, right? It's not that AI is replacing your job, but the cost of implementing AI in a company requires some savings somewhere else, and some of that will come through personnel.
We're just flashing these Fed headlines from Alberto Mosallam, who he's a Fed voter, which we pay more attention to the voters. I know Hammack speaking later, not a voter. Barkin speaking later, not a voter.
Powell tomorrow,
definitely a voter.
Yes.
And Myron today, who is also a voter now. But the fact that he is saying, that it was an insurance cut, the fact that Powell was saying it, is that hawkish, and is that scope for disappointment for the market?
I think it's hawkish, but again, given everything structurally happening at the Fed, I mean, we still don't know if Lisa Cook will stay in her seat. That's a question mark. We know Powell's going to be replaced. There is a small but not zero probability that you could have some regional Fed presidents replaced next year if the administration gets what it wants in terms of the makeup of the governors by next February when they do their regular review of the presidents.
In other words, don't pay attention to the dots.
I always look at the dots as an interesting input and nothing more. I certainly wouldn't put a trade on because of the dots.
Meantime, Kashkari did this essay over the weekend where he said the labor market and the stock market could both be right.
Yep.
Tech driving rapid growth of industry that doesn't require as much labor, resulting in a booming stock, these are his words, booming stock market and sluggish hiring.
Right.
Can both coexist?
For a time, yes. I think you could have a jobless expansion. If companies can cut costs and protect their margins. And if we have enough consumption coming from the higher income consumer, which is what is the case today, then I think you could get the stock market continuing to run for some time, especially with the global FOMO around tech. I mean, it's no surprise to me that outside the U.S., Chinese tech stocks are doing really well this year, right? People are playing that theme. So you could have that for a time, but ultimately, they're going to come back together, right? If the labor market softens enough, if people don't have income, they can't spend. If you don't have spending, that eventually hits into earnings expectations, and the stock market will come back down to earth.
Going to have to tax the corporations at a much higher rate to pay for the universal income that all the people who aren't working are going to need. I'm kidding, but that's people talk about that.
There are LLM CEOs who are saying we need to be taxed because you have people becoming billionaires and perhaps someday trillionaires because of AI. And yet you have the potential for a lot of people to lose their jobs. How do you square that circle? If you don't do something, you're going to have massive social unrest, I think.